Things are changing. Gold's at 35, almost 36. It's $3,600 for God's sakes, and nobody's talking about it. It's the weirdest thing, Mario. If you would have told me, I remember, I've been doing this for 36 years almost, 35. And I remember when gold finally broke through $400, what a big deal it was. You probably remember that too.
I do, I do.
And it was a huge deal. And I would, if you would have told me it will be 9 times higher than that someday, Andy, and when it is, no one's talking about it. That's the contrarian indicator. And when I look at contrarian indicators, Mario, I look at here in the United States, all-time high record investment in stock market by mom and pop investors, the retail investors. All-time high margin exposure over $1 trillion, all-time high by mom and pop retail investor. All-time high option exposure by the retail mom and pop. So you have all-time high exposure in the market with leverage and speculation. At the same time, the institutionals have been selling $2 to $4 billion a week of securities since June. Bezos and Zuckerberg dumping. Bezos has sold over $6 billion of Amazon since June. You have all of these insiders that are Stanley Druckenmiller and Buffett, and they're all saying trouble coming. Jamie Dimon, trouble coming. They're all dumping stocks. The insiders are selling as the retail public is all in. At the same time, the retail public has very little exposure to precious metals in the United States, yet the biggest money in the world, who is closest to the information, they're not just the wealthiest or the most well-informed, they are draining the LBMA for sure and fully bringing all this metal back. Now, some of it's leaving COMEX. A lot of it is. A lot of it is stuff the coffers at COMEX, but who's doing it? Who's bringing in billions of dollars a month worth of gold and silver? If I had to guess, if I had a gun to my head, I would say it's the Treasury under the guise of the Exchange Stabilization Fund, whereby it's American security interests. They don't have to tell Congress what they're doing. They can keep it quiet, at least for a while. And maybe Judy Shelton is right. Maybe they will back the U.S. Treasury with gold on July 4th, 2026. We'll see. She told me that on my show. But if I had to guess what's happening, and maybe you'll think I'm crazy, they passed the Genius Act, the stablecoin bill, which runs the front end of the market. It's all going to be backed by short-term treasury. So you create synthetic demand for the treasury market where there is no more organic demand or a waning organic demand. If Trump really wants to bring back manufacturing, which is a noble endeavor, how the hell do you do it with interest rates that are going to spike? Well, if Judy is right, you peg gold to the back end of the market, 10, 20, 30, and she said even 50 year. On the 50 year, you pay maybe 1% coupon because it's so far out, plus redeemability in gold. And as you go shorter duration, there's no coupon, just redeemability in gold. I asked her, do you think that they will revalue the price of gold? She said, yes. So if you revalue the gold, James Rickard says 24,000. And I'd like to get your opinion on if you think it'll be revalued. His number of 24,000, he takes by dividing, I think, M2 into the gold supply. Mike Maloney says 10,000. Every $4,000 increase in the price of gold would give the Treasury general account 1 trillion free and clear. So let's just play this out. If they revalue gold, and Rickard is right, to 24,000, just pick an arbitrary number, that would give the Treasury 6 trillion free and clear to start to work down its debt. And the way that it happens is the president tells the Treasury Secretary, revalue gold, tell the Fed revalues it, no congressional approval. The Treasury creates gold certificates, gives them to the Fed. The Fed has claim on the cash value of the gold, not the gold. That belongs to the American people. The money is printed out of thin air, which wickedly devalues the dollar. So they revalue gold at a very high number, which benefits every central bank in the world. Not a lot of pushback. It benefits all of them. The price of gold goes way up. Now you can peg it to the Treasury, like Judy says. The act of devaluing the gold and having gold redemption on treasuries with basically zero coupon, no interest rate, allows you to bring back your manufacturing at zero borrowing costs. Yes, you have to pay back the gold down the road, but you bring back manufacturing at a zero coupon, no borrowing costs, and then at the same time, you have a massively devalued dollar, which allows you to sell your manufacturing across the globe I could see them doing this where they say, look, we've screwed things up in a big way. We don't have the demand for the treasury we want anymore. What do we do? Well, we create the Stablecoin Act, the Genius Act, which creates up to $2 trillion a year, according to Treasury Secretary Passent's estimation, to run the government's daily workings by the front end of the curve. The back end is at zero coupon, redeemability in gold. Bring back your manufacturing in a very devalued dollar and sell your way out, grow your way out of this problem. There is no other way but to inflate or hyperinflate or default. Now, the only catch is I could see universal basic income being part of this because it will be very expensive to buy everyday items in that scenario. But I could see the president saying this is our only hope for our children and our grandchildren. We must bring back our manufacturing. And if we don't do it in the face of a massively devalued dollar, no one's going to buy our stuff. In other words, Vice President Vance summed all this up on White House letterhead, Mario. He said, Triffin's dilemma is such that being the world reserve currency right now is not a good deal for us at all. Our hollowed out manufacturing base is not getting any better. AI is going to kneecap a whole bunch of jobs. He said Triffin's dilemma is such that maybe it's just not a good deal for us anymore. If I had to guess, my feeling is that they are doing this intentionally. Devalue the dollar, revalue gold, peg it to the back end of the market with virtually zero interest rates to bring back manufacturing and sell our way out of this product, because as it is right now, we cannot produce our way out. And as Richard Russell, my mentor, God rest his soul, said to me 15 years ago, Andy, the Fed's trapped. They either inflate or they die. This is option 3, soft default on the dollar in an effort to bring back manufacturing through the bond market, which is pegged to gold because it doesn't have any demand. And the running of the country, the funding of the government's daily uses would be through the Genius Act, the Stablecoin Act, which every corporation on the globe that is going to trade in dollars will issue stablecoins, which will all be backed one-to-one by U.S. Treasuries. What say you? Am I crazy? Am I on something, or maybe even potentially onto something? And how else do you grow your way out of the problem? In other words, I think they don't want to be the world reserve currency anymore. And that's why you keep hearing local currency, local currency, local currency, local currency. This country does its best with its back against the wall. And the only way that we're going to do that is to become the epicenter of production and growth, not the way that we're going with AI coming, 60% of America with no college education. We're in big trouble. And so it's his duty, I think, to do this for our children and our grandchildren. There is no pleasant way of doing it. But Triffin's dilemma says because we can't give the world enough dollars alone just through trade, that countries have to sell their currency to buy ours, which creates ours is artificially strong, their currency is artificially weak. And so the act of sending your manufacturing to countries with weak currencies, well, that makes sense. It's very profitable. Those days are over, arguably, at least in my opinion. We've seen, just in the month of September, 42 million ounces delivered into COMEX. 42 million ounces, 1,308 tons delivered into COMEX. That's massive amount in a non-delivery month. You got silver at a 14-year high. You got China flying around the world as the second largest producer of it in the world, buying up all the doré and concentrate from Latin America, in particular Peru and Mexico. You have Russia, who has openly made it a part of their strategic stockpile, the first government to openly do that. You have India, who's bought over 800 million ounces in the last 6 years. And now you have Saudi Arabia taking a massive position in SLV. Now, I hate SLV, but if you look at it closely, they bought enough to where they could demand delivery, which they probably will. I look at silver again as being the word, when I think of silver, I think of the word asymmetrical, lowest downside, highest upside. And it's been suppressed for a very long time. Suppression or manipulation only works by pushing it in the direction that it is going over time. And the US used to be able to do this. The West used to be able to do this. The UK, the LBMA, the COMEX in the United States, all the Western countries were able to do it for whatever reason, whether it be the military-industrial complex, as I argue for silver, or Gibson's paradox with gold, the inverse relationship between real interest rates and gold. Those things work when you're not challenged, but the countries in the global south are now wealthy, coordinated, motivated, and sophisticated, and they're using it against us. And I always point to what the administrator of the BRICS grain exchange said a year ago when and it's being developed right now. And he said, look, we produce and consume more grain than they do in the West, but that will change. Oh, he said, but we can't control the price. It's controlled on COMEX. But that will change when with the development of this new grain exchange, whereby the demand that comes out of BRICS, that's going to change things. Knock that off. So I would simply say to you that this is something that I think has been exposed. The suppression of gold and silver, I think, has been exposed, and the countries around the world are using it against us. And maybe this is the understanding and the realization that this administration has come to. You're seeing the price slowly move up, not too fast, not too slow, but it's outperforming everyone's expectations all of a sudden after underperforming and underwhelming for a very long time, so much so that most of the public won't even notice it. And that's the crazy thing. They aren't noticing it, but someone is. Who has the ability to bring into the COMEX 42 million ounces in the month of September, the delivery contracts in just the first few days? So this needs to be thought about. These people that are doing this, whoever they are, the level of sophistication and wealth is off the charts to be able to do that. And then the people who have that kind of money, they don't do things just for the hell of it. They are closest to the information. Look at billionaires like David Bateman, who's bought, several hundred million worth of silver. I don't know the exact figure, but he's a billionaire who gets it. People with the inside track to the information, I would argue, are the ones that are flooding COMEX. Whatever, and a lot of it's leaving COMEX. Not all of it, but a lot of it. And so whoever's doing this, I would argue they know what they're doing. And I think this is the key to it all. It's not listening to the noise. It's looking what the biggest money in the world is doing. They don't get to that level of wealth and sophistication, by chance. And the people that they associate with are at levels of information that we all wish we knew. To me, this is the interesting thing. All of this metal coming in to the COMEX, yet zero acknowledgement of it by the mainstream. No one's talking about who's bringing in what amounts to well over 100 billion worth of gold and silver since the beginning of the year. Who? And why isn't it talked about at all? And then you got guys like Vince Lancy, who's as smart as they come, saying 85% of the metal that's coming into the world's exchanges is not being reported to the IMF. In other words, a lot of it's coming in, maybe not to the COMEX, that's coming into private vaults, not being reported to the IMF. This is a game of let's get as much as we can before the world catches on, would be my opinion.